Welcome to the Think Factory podcast. We got one question for you. What keeps you up at night?
I'm Susan Nofi with OGC Solutions, and it's my pleasure today to have with us some folks from Colography here, not far from where our offices are, just outside the perimeter in Atlanta, Georgia. And with me are Darren Lamb and Russell Reams. And, you know, as I told you when we first met, the logistics and shipping industry is an interesting industry to me. But, you know, given recent events, the economy, the state of shipping, I think it's on everybody's mind. And you provide a unique service, I think, an innovative service to the industry that provides some valuable information and insight for a lot of companies. So maybe we can start with, how did the name Colography come about?
Well, Susan, a lot of people think that we do color graphics.
Yes.
So that is a no. We do make charts and they do look pretty, but we've graduated beyond kindergarten there. But the Colography group, I should take a half step back in time into the early 80s when there was this thing called deregulation that was going on in the market. And as the government started getting out of the data collection business, especially around the transportation as it relates to shipping of freight and packages within the U.S., the co-founders of the company, Ted Shirk and Cliff Currier, who unfortunately are not with us today, but they had this vision of a company being the source of having reliable and actionable market information so that transportation providers could still be able to market and sell their goods and services within the market. And so as they've told me when the company was started, it was over a billiard table and some beer, and they came up with the word Colography. And it comes up from three words: cost, logistics, and geography. And so that's how the Colography group was born.
Interesting.
In 1983. And we have been going strong now since 83, providing and trying to step into the gap of providing actionable market intelligence about this market, not only here in the United States, but also cross-border with the United States and in certain areas globally as well.
And I'm going to pick up there where Darren left off. When you think about decisions that you have to make in this industry, there's different perspectives. There's the perspectives of the carriers, whether it's small package, whether it's LTL or full truckload. They have to make decisions about where do they invest for their networks. When you talk to the shippers, whether it's a retailer or a wholesaler, they have to decide, where do we place inventory? How do we actually split that inventory up over different warehouses across the country? And that's where really those three words of cost, logistics, and geography marry so beautifully, because the tools that we have available today in terms of algorithm and machine learning were just pipe dreams in 1983 compared to what we can do today.
Right. And I would take it a half step further. Is the people and the clients that we serve and have served over the years, this shipping and logistics space touches a lot of different avenues. As Russell just mentioned a couple, but today technology firms touch logistics and transportation. Government touches logistics and transportation. the legal world, academia, just to name a few. So it has been very fascinating to me in the clients and the people that we work with over the years, and how they all have a different view and angle and need within this transportation logistics space.
Fascinating, just fascinating. Can you tell us a little bit about the various services the company offers?
Absolutely, happy to. So we were recently at an industry event, and you get questions, what do you do? And most succinctly, we're a market intelligence firm.
Mm-hmm.
We are very data centric. Whether it's our forecasts for the industry, whether it's our sizing of the industry down to different geographic levels, by employment size of the businesses that are doing the shipping, by the services, right? So in some of our products, we will tell you our forecast for the industry looking out 5 years into the future, whether it's going to be air or ground. Separately, we have time and transit products that help understand where is volume moving, so that you know, if you're a carrier, where do I need to make investments? Where are the opportunities that if I can improve my time in transit, I can grow my business, versus where are some lanes that were popular 5, 10 years ago and they need to be deprioritized now because different material moves differently. And that's really thinking in terms of whether it's small package, whether it's freight, looking at how do I actually make decisions in my business. That is the core of all the consulting, the different custom research we do, the ongoing national survey that we've run since 1993. They all go to make informed decisions about strategy and about growing our customers' business.
Interesting. So I'm curious, do you find that I'm sure you have a steady customer base, but when you get new customers, are they coming to you as part of strategy, or they're coming to you when they're in trouble? Or the industry has been so volatile because of issues with shipping not being, from a consumer standpoint, it looks like the issue is shipping, that shipping is unreliable, or we've got issues with shipping. So when do you get new customers?
I will say, to answer your question, is yeah, we get them at all stages and phases.
Mm-hmm.
But I will say, times like this, when
Yep.
there is uncertainty in the market, remember I described this as a market intelligence organization, that is actually a time that's a great opportunity for us, because we are fortunate that we've had some large customers for many, many years that we actually have a tremendous history with. But then we have customers that may come to us once a year, every other year. And so when we do go to industry events, right, week before last, we were at the National Parcel Forum, and we talked to lots and lots of businesses. Some we do business with, some they're looking for how could we do business with them. And so that is where our firm really excels, is when you need clarity, right? Because I mentioned earlier, our national survey of expedited cargo. It was started in 1993. To our knowledge, it is the largest, longest running longitudinal effort to collect data in this industry that's ever been undertaken. We've run it since 1993. We have all that data in-house. And so we can tell you by year, by decade, was ground more of an opportunity, which it really wasn't 30 years ago. Air was the opportunity 30 years ago. Whereas today, when you look at coming out of the pandemic, retailers and wholesalers have gotten so much more sophisticated. The tools that are available to allow them to position inventory closer to their customers mean that they don't need to use air services as they once did. Mm-hmm. So if you look at the last quarter for air services in the US, they were down 19.3% year over year. Mm-hmm. And so that's the level of precision that we provide our customers. And so historically, we have tended to work with larger clients, work more on what I'd call bespoke customized research with fairly healthy price tags. That is something we're doing a lot of efforts now to open new lines of opportunity where we will have products for customers that don't necessarily have those big budgets for marketing research. Mm-hmm. Our goal is to launch some self-service, digitally based, it could be as simple as a white paper where they have, graduated scale for how much detail information you want, but we have this amazing amount of data in our repositories that I think our opportunity really is to share that across a broader audience than we historically have.
Right. I would add one more thing, maybe a little bit off on a tangent, but because we've been doing this for so long and the methods that we have developed over time, we have the vision and the view of the market when things change and being able to understand its impacts. So, for example, you can go back 20 some odd years and maybe even longer. There is a supply chain event that happens almost every year that impacts businesses and the overall supply chain every year. We could talk about a big winter storm down in Texas that shut down the movement of goods because of the ice storm. We can talk about tsunamis. We can talk about hurricanes and other geopolitical events that impact the supply chain. And our knowledge and experience within that, we're able to help take the view of history and how the market had adapted and reacted to these events, and be able to help inform you with current data to how to adapt and become more successful within.
So, I'll do a deep dive on what Darren's talking about. When you have this wealth of information, it changes by the year and by the client, but we do see trends. So in this year, and Susan, you started by talking about uncertainty in shipping. You mentioned that very early in the conversation. Mm-hmm. I'll say one of the areas that we see clients and potential clients struggling with is returns. When you think about how hard retailers and merchandisers have worked over the last 10 or 15 years to grow e-commerce, one of the mechanisms that they did to grow that business was they had very liberal returns policies. They encouraged us to do something called bracketing. Oh, you're looking for a shirt? Well, maybe you're not sure, get the medium and the large. Maybe you want the blue and the white. And so you really only want one or two shirts, but maybe I'm ordering 4 or 5, knowing that I'm going to return half of that order. Well, with the pandemic and with the surge that we saw in e-commerce shopping, this has given a massive headache to retailers because they have a returns problem. And so that's one of the things we do research in a very, very deep dive format, because these retailers are trying to figure out, how do I continue to serve my customers well? But if I don't get a handle on returns costs, which by the way, for them are up more than 40% over the last 4 years, then they won't be profitable as business concerns. And so they have to come up with ways that they manage the returns costs, but do so in a way that their customers don't get frustrated.
Yep.
So one of the ways that we see retailers handling this is they're asking customers to opt into subscription models, meaning up front, you understand as a customer that if I want to return something, I'm going to have to pay into a model. Either I'm going to pay a little bit more for the items I buy, or I know that if I return them, it's not going to be 100% free. But when you look at the costs of what this means, in the first half of 2024, there were more than 500 million packages that moved through the U.S. small package network as returns. So when you think about the scale of how big this has gotten, if you wonder why, maybe there's a fee when you want to return something, maybe that return policy isn't as generous as it was a year or two ago, this is why. And this is an example of a problem that we work with our clients to help solve.
Right.
Mm-hmm. Yeah.
I talked to one large retailer not too long ago, and they put it to me this way: returns is a necessary evil, because I need to have good customer service. But the evil part is it costs me a lot to have to ship that return. It costs me because there's oftentimes I have to refund you money, so it's lost revenue for them on top of the cost of having to deal with the returns. So it is such a sticky and painful point for a lot of organizations today.
And I'm sure it's also driving up costs or prices on their side. It's got to go, the price of that has to go somewhere. So
At the end of the day, as consumers, we all have to foot that bill.
Right.
Yep. If you pay for convenience, you pay for what you get. Very. So talk a little bit more just about, I mean, we were talking about the shipping market. And it was, as you were talking, I was recalling my own experience with clients, who had logistics and warehouses and that sort of thing. And, I didn't think about it in those terms that years ago, yeah, we were doing tons of business with the air freight carriers, and now it's all ground. And how are those ground? Well, a lot of them are the same carriers. They've just switched to more ground than air. Can you talk a little bit more about that?
So that market has actually evolved tremendously. And it's one of the messages I would tell anyone who's a customer of transportation services in 2024-25, you must become a much more sophisticated consumer. As a customer, you're going to have to understand the market. This is one of the reasons we feel a need to push our services into new areas that aren't so expensive, because the days of where I could, as a shipper, sign a single contract, or maybe I've got a backup contract with one or two carriers, that is not really how to manage a business today. If you're going to compete with best in class shippers, you have to understand that on average, they have multiple carriers. They're working with, of course, the national carriers, but they're also working with the regionals. And so most people aren't even familiar with the network of regional carriers that are out there across the U.S. Some are big, like On Track, which, they absorbed LaserShip a couple of years ago. And so they cover about 60% of the U.S. population today with the zip codes they serve. But there are several more. There's at least a dozen more strong regional carriers that if you are a large shipper and you're looking to maintain cost control over what you pay, and you're looking at how you move those goods, you need to look at what's the mix of transportation providers I have. What are the consolidated movements that I need to make? Maybe not all your movements go straight from a warehouse to the customer. Maybe you've got some consolidations that move from your warehouse and then get dropped off at different carriers. Mm-hmm. And it blends speed of delivery, quality of the service of delivery, as well as the cost that you pay. And that's where a lot of our newer products have come in. This is where we use, technology, and we use math, where we can tell you, we have customers where we run as many as 32,000 to 34,000 specific customized zip code pairs to see what are the actual time in transits across those different lanes. And that helps them understand how do they move goods. And you have to look at the non-traditional opportunities to deliver. I'm sure that you, like me, will occasionally order something from a DoorDash or from an Uber Eats. Well, they're doing a lot more than food and groceries now, right? DoorDash has a service where you can actually have a return and they'll come pick it up for your home and they'll take it to UPS or FedEx or USPS. And so when you look at these non-traditional providers, for certain types of shippers, they represent an opportunity.
Yep. It's a new world, which leads me into the next topic is, basically the economy, the U.S. economy and the global economy. It's changing, and there's a sense that prices are going up. It's all out of control, but the economy will affect, and how I feel as a consumer is going to affect what I buy and when I buy it, which is going to have the direct effect on shipping and your business. How does did I get that right, or how does the economy affect what you do?
You absolutely got that right, Susan. And you have to understand, particularly when you look at the U.S. The U.S. is a consumer-driven economy. The majority of spending occurs by consumers. And if the consumer gets a cold, then our economy gets the flu. And the good news is, when I think about where we were, and that's one of the big things that we do, because we do maintain a forecast, which means we're constantly consuming and adding and tweaking our models based on economic data, hundreds of variables. When I look at where we were a quarter ago versus where we sit today, I'm a little concerned about what I'd call geopolitical situation on a global basis. But when I look at the economy in the United States, we have a lot of things to be quite thankful for at the moment. You see today we had a new jobs report. Hiring is much stronger than expected. Unemployment actually dipped down by 1/10 of a point. I'm glad that didn't come out sooner, because we might not have gotten the 1/2 point basis decline that the Fed is finally reversed course and is actually going to lower interest rates and perhaps even loosen up the money supply a little bit. Because if you're a consumer, you look at data very differently than we do, right? If I think about me as a consumer, I look at something I might have bought back in 2019 or 2020, and I'm probably paying 40 to 70% more for that good or service, because we had so much inflation during the pandemic. But when I look at 2024 as someone who's preparing an economic forecast, I see a lot to be happy about. I look at industrial production has reversed, right? We had a few months of declines. We just got good news on that front that industrial production is growing. And if industrial production grows, then there are boxes and shipments to move around, and there are things for consumers to buy. When we look at consumer confidence, the consumer has resiliently held up, right? That was the story of 2023, was would we get the soft landing? And well, it turned out 2023 and into 2024 have been very strong economic engines. And I think when you look at it from someone who works with this data on a professional level, it feels very different because there's so much to be positive about. But when I think about something as a consumer, yes, the U.S. consumer is a bit fatigued, because when you think about, we're talking about slowing inflation, but that is slowing inflation after 4 years of inflation at an elevated rate. Mm-hmm. So it really comes down to whatever you bought 4 years ago, you're paying a greater than average inflation rate on that product today than you would in a normal time. Mm-hmm.
Right. And I assume you agree with me that those prices are going to stay exactly where they are no matter what happens.
Well, we're seeing retailers take steps. So if you look at Walmart and Target, right, they reversed course on pricing over the summer. And we've now seen both of their earnings. They both took thousands of items on their websites and in their stores, and they strategically lowered prices. And they just delivered very good quarterly earnings results. The analysts that we speak to, that's another community we serve, is financial analysts. They tell us they're concerned about, Dollar General as a store because they're known for serving that market. Well, Walmart hurt their business over the last quarter because they were so aggressive in their price cuts. So you have to hunt for the deals, but they're becoming more available.
Well, that's good to hear. That's good to hear. So Christmas is coming up. I'd imagine all these stores and all these shippers have gotten their goods where they need to be, or has the just-in-time economy affected that as well?
We're going to find out. We just
Okay.
heard today that, or yesterday evening, that hopefully the longshoreman strike has been resolved, and that's going to be pushed off till January, because that was a very real risk to peak this year. But I do have to, have a little bit of an inclination to my experience in the industry on the carrier side of this business. Peak 2024, get your orders in early, because it's a short peak season. And what do I mean by that? If you're a carrier, in January, you're looking at how many days are between Thanksgiving and Christmas. And there are 5 days less on the calendar this year. 3 of those are business days. Those are service days. So that means if we consumers are a little slow to place our orders, then it's going to be a real challenge for the carriers. And it may be a challenge for me as a consumer if I wait to order and the carrier can't deliver on that service commitment.
Yep. I would also say some of the more savvy retailers were anticipating a potential strike, and so they were able to get in some of their orders before the temporary strike that we had. So it's going to be interesting to see who was proactive versus those who were reactive in this space. But I agree. So I think like last year, you're going to see sales earlier. We're not going to wait till Black Friday. We're probably going to be seeing some aggressive sales. I wouldn't be surprised before we go to bed on consuming our candy on Halloween night. So I think we're going to start seeing some very aggressive sales here soon.
Interesting.
And I'll say this, right? When we think about peak, this is a very good time for shippers to look at where they are in their agreements with their transportation providers. It used to be very simple. We could look and see, what did FedEx do? What did UPS do in terms of peak surcharges? Because this year we saw the peakiest surcharges we've ever seen earlier in the year than we've ever seen from UPS. UPS announced some very peaky peak surcharges this year, and then FedEx slowly followed suit. But remember, I mentioned those regional carriers. They're all making announcements for peak surcharges as well. And so when you're thinking about how the sophistication of a shipping customer has had to evolve, you've got to, as a shipping customer, look at what are the time and transits I'm getting from each carrier, what are the base charges they have, but also what are the fuel surcharges, what are the peak surcharges, what are the net minimums that I have to ship in order to not be penalized for what I've shipped. And then there are residential surcharges. So when you look at the average price increase year over year has been 5.9% for the last couple of years. When you add in all these other factors, it's more like a 10% price increase year over year. So remember, we listen to the Fed with a target of 2 to 3% on inflation. But if I'm the shipper and I'm facing 6 to 10% increase in shipping costs, well, I've got to figure out something, because that's going to be very difficult to just pass on to my consumers.
Right.
That's true. Yeah. Yeah. And as a someone who advises, a lot of these companies are asked to review contracts for these shippers and distribution companies. A lot of times they simply don't have the expertise to analyze a contract in those details. And there's only so much lawyers can do. So it's good to hear that expertise is out there, and we've got somewhere to refer them to as well.
Absolutely. We'll be glad to help.
We hope to have that's at a minimum a white paper that we can provide them to cover all the things most of the things we just talked about.
Right. Great. So, what else can we learn about a ton in the half hour that we've had together? I'd love at some point to sit down and have a chat with you guys. As I said, you're just down the block. So anything else that we can talk about today?
Oh, we could talk about many things, and for us, it's very exciting, and for the other people, it's not as exciting because at the end of the day, it's a six-sided brown box that we study. But I mean, as Russell alluded to, these are very interesting times. There's a lot of change in the market. And especially as it relates to the regional and last mile carriers, as Russell mentioned earlier. So I think if you're a shipper, you need to be very savvy in looking at how you do things. And then if you're a consumer, same. There's be an educated consumer, especially within this market. But we could go almost anywhere and all day, because there's so many different facets of this market we could talk about.
Yes, I tried to stick to the ones that were more appropriate for a general discussion as opposed to a technical discussion.
Well, I've learned a lot, and I think this is a great service, and it was great foresight by your founders to fill in where the government wasn't recording this information anymore. And it was great to talk to you guys today.
Likewise, Susan. Thank you very much.
Thank you so much.
You're welcome. You're welcome.